So welcome everyone. My name is Matthew. I host the podcast Junior Resource Investing. We'll just do a couple little quick and dirty laundry list items here before we get to the good stuff. As always, this is being recorded, so just be aware of that. The recording will be available on YouTube shortly thereafter. Q&A, right? This is. I would like this to be as interactive as we can. So please fire your questions off into the chat at any time. If it fits well into the conversation as we go, I'll try to fit it in on the fly. But if not, I'll make sure that we carve out some time at the end for your questions. So yeah, please engage. And standard disclaimers. All standard disclaimers apply here. Not financial advice. To speak to your own financial advisor. With that out of the way, though, the title of this panel is Lithium, Powering Tomorrow, Future of Extraction, Processing, and Recycling. Lithium is the future, and there's really not much of a debate to it, right? The potential for the future and our ability to realize that potential flows through lithium. But this means far more than what might immediately come to mind, namely batteries and EVs and the electrical revolution. Yes, rapidly growing our lithium production capacity is, of course, a huge part of that, but transitioning from consuming lithium to using lithium, closing the loop and creating a more circular economy for our battery metals is also an integral part of that future and its potential for realizing a more sustainable world. This, then, is the topic of today's panel. I'm joined by two traditional lithium explorers representing all the different styles of investment theses and deposit types, but I'm also joined by a company dedicated to cracking the code on lithium recycling in pursuit of that circular economy I referenced earlier. Joining me today are three gentlemen. We have Ali Haji, who is the CEO at Ion Energy, Carlos Vicens, who's CEO and Director at Full Circle Lithium, and Steve Rentschler, who's CEO at Nevada Lithium Resources. Gentlemen, thank you for joining me, and I hope you have a good chat here with me today. So let's just super basic question, right? Boilerplate just off the start. Company introductions. Why don't you take a moment here in turn and explain to me and our audience who you are, where you operate, and then basically just provide an elevator pitch for your company. And Ali, do you want to lead us off?
Sure. Thank you, Matthew, and thank you to my panelists. My name's Ali Haji, Chief Executive Officer, Director, and Co-founder of Ion Energy, a company that was started in 2017 that went public in 2019, well before this lithium upheaval, so to speak, with an asset in Mongolia. So we currently have two assets in Mongolia. One is 81,000 hectare license, very similar to Thacker Pass, so clays and evaporites. Importantly, we have a 29,000 hectare license, Urgat-Naran in Dorngovi province, that's showing significant promise in the brine space and located extremely close to infrastructure. This past summer, we also acquired about 6,500 hectares of very early stage outcrops of pegmatite in the Northwest Territories. So we now are operating in two separate jurisdictions, covering all mediums of lithium with some catalysts underway, including an inferred resource as well as a strategic investment.
Excellent. Thank you, Ali. And Steve, I'll pass it off to you.
Sure. Thanks, Matt. I'm Steve Rentschler, CEO and Director of Nevada Lithium Resources. We are developing the Bonnie Claire asset 3 hours northwest of Las Vegas in Nevada. We have a PEA that was finished 2 years ago, preliminary economic assessment that showed very robust economics at lower lithium prices than we have right now. Mining.com called us the third largest sedimentary / clay and hard rock deposit in the world right now. We have far more resource than we need. We have basically a project that we think can be upsized, but we're looking at a 30,000 ton a year lithium carbonate production rate for 40 years, starting somewhere around 2029 or 2030. We have excellent infrastructure right off of Route 95, as I said, only 3 hours from Las Vegas. And, we think we have a very interesting value proposition because it's taken us the past 2 years to essentially consolidate 100% ownership under Nevada Lithium. And so we've been relatively silent. And we're just starting to come to the market now and show ourselves as we progress with our pre-feasibility study.
Thank you, Stephen. On to you, Carlos.
Sure. So I'm the company that is not really doesn't have any resource per se. So we are Full Circle Lithium. My name again is Carlos Vicens. I'm the CEO, founder, and director of Full Circle, and we have a lithium and processing and manufacturing company in the state of Georgia, in the U.S. We currently have a 2,000-ton lithium carbonate facility at the plant, and we're working on 3 distinct business units to feed that plant in Georgia, one being a battery recycling unit, another one being a midstream, or what we call midstream or feedstock recycling unit, which works with industrial and chemical waste that contains lithium and recycle that. And the third unit would be the lithium refinery, which mostly works with companies in the upstream side, such as mining and other potential companies that have, I would say, any type of lithium compound that needs to have additional processing done in order to be sold to the market.
Excellent. Yeah, three different interesting companies here, and I think I kind of like the diversity here. So I think, and this is probably a good segue, I don't need to tell you guys that the junior resource space is extremely crowded, right? There's a lot of different companies vying for investor dollars. So why don't I just follow-up question then, what makes you unique, right? What is new or different that you are doing that otherwise will make you stand out from your peers? And so I'll take it back to Ion.
Sure. With Ion Energy's venture into Mongolia, we're first movers in the lithium space. So we started looking at lithium in 2017, a jurisdiction that, of course, neighbors the largest consumer on the planet today, that being China. Currently, all lithium is imported from either LATAM or Australia for Chinese consumption. So being able to find lithium in a jurisdiction so close to the major market of the planet, of course, differentiates us from various other players that are in the lithium space today. Beyond that, despite us being first movers, we've now seen the other organizations or global organizations enter Mongolia seeking lithium and investing in lithium. So we appear to have been on the right track, and we're on the cusp of course, unearthing the value there.
Excellent. And to you, Steve?
I think what differentiates us right now, and again, we are one of what I call sort of the next tier, the next movement of lithium producers coming forward. These are the sedimentary and the clay deposits that frankly have never been needed before because the global demand for lithium wasn't there previously. But obviously, by being located in the United States with all the benefits of the Inflation Reduction Act that have been legislated by the U.S. Congress, we are differentiated from our global peers in that way. But at the individual level, we have a couple of different things that we're working on at Nevada Lithium that we essentially had put in place and also had geology help us out that would help essentially lithium end users be able to differentiate the lithium that went into their products. So really the two things that we talk about are, one, our mining method, which is something proposed in our PEA in which we're advancing for our pre-feasibility study, and this is called borehole mining, which is essentially using high pressure water to erode the material down at depths at Bonnie Claire. This is very, very easily movable or friable material that sloughs off, goes down at the bottom of the well sump, and is pumped back up through the annulus directly into a plant where we will make lithium, battery-grade lithium carbonate, something that we've already done. So that's a differentiator. It's used in various other places, but in not nearly the scale that we're talking about. Cameco uses it at Scar Lake, Amerigo uses it to reclaim their tailings. And the second is our recovery process, which does not use sulfuric acid. And this is where the geology comes into play. We're a sedimentary deposit in which the lithium is not encapsulated in the clay, so we don't have to burn through it with acid to basically recover it. We sort it out, we go through what's called calcination, which is heating it up, and we add a reagent, sodium sulfate, and we wash the lithium out in warm water. So this has obvious benefits in terms of acidic drainage from tailings, things like that. And we're also in one of the best places on Earth for alternative energy, solar, wind, and the Hoover Dam down our location. Again, a couple hours northwest of Las Vegas, Nevada.
Yeah, excellent. And then Carlos, this one is kind of tailor-made for you guys into context of this one. So do you want to just explain to us what makes you stand out?
Sure. So in my prior life, I was a CFO of a upstream asset in Argentina, a brine asset. But and the upstream side is very lucrative in terms of what can potentially be done there. But in our case, in this new venture that we started, we moved downstream. And one of the reasons we moved downstream is because we saw a lack of processing capacity outside of the big companies. So you have the typical Albemarle's, the SQMs, the Alchems, and so forth, and the Chinese Chinese, of course, that do process the majority of final products that get sold into the market. But there are no intermediates or smaller producers of manufactured lithium. So that's one of the reasons we started this plant in Georgia. We only have 2,000 tons of capacity now, but with our current infrastructure, we can expand capacity up to 10,000 tons in the current building. That being said, we can build additional if that in the future if we need it. So that in itself is very new. In fact, if once we start producing from that plant, I think it's the only plant that has been built and producing lithium over the last 20 years, specifically in North America. So that's part of our differential there. And then in order to feed that plant, we've also built 3 distinct business units, which are all of them in itself very unique. One is the recycling of chemical and industrial waste that contains lithium. This is a market that nobody is looking at, and we believe that there's a significant lucrative market there that we can obviously urban mine, as people call it, or recycle lithium from waste that's being treated and disposed and not being taken advantage of in terms of what the market is. Then the battery recycling, of course, you're going to see a lot of these batteries come from 3 distinct ways. One is end-of-life batteries, the other one is off-spec batteries and other off-spec cathode materials that are coming out of all the production of batteries that's currently happening in North America. And then the lithium refinery business was built around what Stephen and Ali are doing, right? So the gentleman here and many other companies, usually what they want to focus on is in mining. Not necessarily, well, I'm not saying all of them, but generally they don't want to focus on the final stage of production. That being said, Stephen and Ali may have a different view on that, but some companies do not. So they have what we call a precursor material, which could be a lithium sulfate or lithium chloride that would need additional processing in order to be sold into the market. And that's when we come in with our plant, lithium carbonate plant, and help them get to that point. So that's why we believe we're unique. We have a pretty good value proposition in all distinct lines of business. And, we're obviously trying to set up in a location that also benefits the Americas market.
Excellent. And so what I found interesting when I was kind of sitting down to do my research for this project was that, and so Carlos and I mean, all 3 of you gentlemen have already kind of touched on this, but all of the potential deposit types for lithium are present here, right? And so you have your brine and your hard rock and your clay and sedimentary and the urban mine, as Carlos referenced there as well. So I thought I would take, and there is decent daylight between you on these topics, and so I thought I would ask you gentlemen to discuss your deposit type, and you all have multiple, or I know that you have multiple each, but just to help me and help our audience understand your project and the deposit type that you are pursuing and its advantages. And so, I'll have you go first again, Ali. But I mean, my understanding when I was looking through your slide deck is that your brine deposit looks like it's going to be very cheap, very economic, and very nimble in terms of extraction and production. Do you just want to kind of take us away there and talk about brine and touch on clay afterwards, if you like?
Sure, absolutely. In terms of brine today, the traditional way of producing a concentrate was through evaporation ponds, which are hugely expensive. They require a lot of earth moving, large capex, and of course are not very environmentally friendly. So we've seen an advent or the movement towards direct lithium extraction, which as early as 2 years ago would have been a dirty word in the lithium industry that wasn't spoken of because nobody had gotten there yet. Folks like Carlos at Full Circle, well, they're getting there. And that's a testament to what's been done technologically to allow DLE to come to fruition. Where we're situated with Urgat Naran in Mongolia, we are 7 kilometers from the closest power supply, the national grid. We're also within 50 kilometers of high-speed rail into Ulaanbaatar and Beijing. So from a logistical perspective, and having been in Mongolia for the last 14 years, my chairman built and sold a mine in 2011. We brought a gold producer online in 14 months from greenfield to first gold pour. You've got enough skilled labor. Your cost of labor is significantly less than if you were operating in the Americas. And of course, let's not forget the environmental footprint associated with shipping ore 15,000 miles from China for processing and ultimate consumption, whereas we are within 150 kilometers of that border. So the brine asset that we have in Mongolia, we believe will will be at the bottom of the cost curve relative to any of our peers. And of course, having infrastructure and power so close by gives us that much more of an advantage. So we are very much focused on our brine asset in Mongolia today. Our other project, Bavayol, as I mentioned, the more clay evaporite project, not taking a back seat, but we certainly have prioritized Rugaknaran today, and we will continue to advance that asset.
Excellent. Thank you, Ali. And so, Steve, I'll pass it to you, right? I mean, you have a different sort of deposit. You are articulated nicely already some of the advantages you have there, but do you just want to take a quick opportunity just to provide some context and color for that?
Sure. The way I look at it is with the evolution of the EVs coming into the demand profile for lithium, this is a totally different ballgame than what we had previously. So we're all aware of the brines, which I would imagine probably the first to be exploited for lithium. So this is just lithium that's in solution and exploited through evaporation ponds, or as Ali was saying now, the new direct lithium extractions are basically I call them black boxes because they're tailor-made to individual deposits to recover the lithium. That those are being utilized on the brines now. And then you have the hard rock. So traditional, it is what it sounds like. The hard rock materials, you'll see these, of course, in Quebec. You'll see them in Australia, other places, but where the material is, dug up, blasted, whatever, and sent away, concentrated, and then upgraded most of the time in a different place. And then we finally get to the evaporitics, or the sediment deposits, and I believe you're going to see this type of deposit absolutely take over Nevada in the U.S., which I believe is going to become the centerpiece of the U.S. lithium industry. And this is just over time, volcanoes and wind blowing things around and being laid down inside of inland seas and lakes, and just think of big blankets of lower grade lithium that over millions of years were deposited. And until this time, they weren't really needed. And I think they got lumped into sort of everything. All clays are alike, and clays can refer to a lot of things. It can be the size of the particles, it can be the actual particles. But suffice it to say, I believe that a lot of these different projects are all going to be exploited in different ways. They're going to be, I think, because you see Thacker, you see going farther up north to Jindalee, a whole host of other projects that so far haven't been identified. You've seen other ones down in Mexico, like in the Sonoran Desert. Rhyolite Ridge is another one. They're all going to be necessary. The recycling is going to be necessary, because when you're talking about trying to basically take commodity from, say, 500,000 tons a year of lithium carbonate equivalent to 2.5 or 3 million tons over the course of 6 or 7 years, I can tell you that's never been done in the history of a commodity. It's 20, 25, 30% compounded annual growth rate. The wheels start to fall off a bus of industry, basically mature industry like copper, if you go above GDP plus or minus 1 or 2%. So all of these projects are going to be needed. Now, that doesn't mean that we're going to have to be able to circumvent permitting or anything like this, but the need is there, and I think you're going to see the sedimentary deposits play a very, very large role in the overall global supply of lithium going forward.
No, excellent. And I'll bypass my own need to reflect on that one. But Carlos, I'll let you take the floor here, and you can. And urban mine, right? So maybe a brief explanation of what that is, and then highlight its advantages in terms of what it means for you.
Sure, and just one more comment on what Steve was saying. I remember I was in lithium since 2007, and at that time, markets was much smaller, and every project was fighting for capital, and a lot of people were saying that this project, they're all mutually exclusive, right? And in this case, every project is going to be needed. We're going to need every single mine and every single type of deposit. So I just wanted to add that a lot of these projects, or at least in the past, they were trying to fight against each other, saying who's better and this and that. Now, I think we need to come together, because all these projects are going to be needed, and that takes me to urban mining, which is that's a different type of project, I would say, or a different type of resource that is readily available, right? So what is urban mining? It's essentially recycling or mining lithium and other materials as well, battery materials. But because we're talking about lithium, that has already been mined. So, for example, like I mentioned before in our introduction to the company, we are recycling chemical industrial waste that has utilized a lithium compound and has a waste material that's usually water-based, and they're treating that material and disposing of it together with the lithium and other materials. So what we're doing there is that we're installing a processing plant at the client site, extracting the lithium and also extracting some of the impurities. In fact, the impurity removal is a lot more stringent at that point than you would ever have at the upstream level, meaning at the mine, because these are very, very, very high tech or very specific type of specifications that the client needs in order to produce their product. So highly pure lithium chloride, for example, in this example, but it could be a lithium carbonate or lithium sulfate or whatever that is that the client needs. So that's on that specific one. Another lithium urban mining would be on the battery recycling side, which more or less everybody understands what that is. We're building a lot of batteries for EVs and industrial equipment, as well as energy storage devices. So these batteries are coming up due, meaning they're at the end of life, or they have some spec issues, or they're not working. And the materials within that battery can be recycled. So again, you're going to have a lot of these batteries. It's just starting to come. A lot of the batteries are still being developed. The growth is not coming to the recyclers just yet, but over the next, I would say, 5 to 10 years, you're going to see a wave of batteries coming into the recycling, I would say, age. And you're going to see companies such as ourselves and others take advantage of that in order to recycle better materials. And the last one, which is not a recycling, I would say, urban mining, is trying to help and understand the needs of upstream assets that provide you with a product that is not necessarily saleable, or they can take advantage of purifying or processing further in order to get maximum value for their product in the market. So if for example, a mine produces a lithium chloride solution or a lithium carbonate, a technical grade, we can upgrade that into a battery grade product, and then sell it for a lot more in terms of a premium base in the market. So those are the three distinct kind of ways that we're trying to do business at our side and how we differentiate ourselves, but we're tied to the hip with the miners. I mean, whatever they produce goes into another product, and then that product comes to us, and then we can help them as well get better products into the market. So of course, we're all working together in the lithium space. So it's just a little bit of a different aspect of the manufacturing of lithium.
No, thank you, guys. And I mean, I think that you're articulating something that I think is critical for people to understand. And I think that the market at large fails to appreciate just the sheer scale. I mean, a literal order of magnitude in terms of coming demand within years, right? And then there's going to be this whiplash moment where I don't know what it's going to look like, but eventually something almost has to break. If anything close to coming demand is ever met or ever realized, that companies such as these three are exactly where investors want to be. And so, I mean, I think, as a transition, you're starting to see jurisdictions and countries increasing, I would argue, still woefully insufficient, but increasing priority on critical minerals, right, or jurisdictional support in general for these issues. And so I thought I would, again, just, the next question is then that question of jurisdictional support, right? What are your, regional or federal jurisdictional advantages? And again, that helps set you apart from your peers. And this could be, critical mineral designation, government funding, battery plants, or, potential gigafactories, or even just, general government support, whether that's permitting or incentives or low taxes, et cetera, right? And so I'll circle back to you and let you kind of take that one.
Sure. I'm probably in the most exotic of jurisdictions relative to my peers here. But Mongolia is, it's a very recent democracy. In 1991, it fell off the Soviet bloc. It is a true democracy that has elections every 4 years. It is a new jurisdiction from a mining perspective relative to the rest of the world, purely because it sits perhaps 30 years in the past, perhaps where Africa was 30 years ago. 1.5 million square kilometers, of which only 1% has been explored. It is home to Rio Tinto's Oyu Tolgoi copper gold mine, which employs 15,000 people in country and is the third largest copper gold deposit in the world. Rio Tinto has put about $20 billion into that project. So if a global major like Rio Tinto is signing off in a jurisdiction, hopefully the viewers and listeners that are worried about the jurisdictional risk have that cleared. But I will say that the government has been extremely supportive of what we've done not only with Ion Energy, but Step Gold, a company that I was affiliated with prior to focusing entirely on Ion. The government did help fund the growth of that operation to bring it to production. They buy all the gold. They were paying a small premium to spot during the Russia-Ukraine crisis. And in terms of critical metals, I've been out to Mongolia now over a dozen times, and in the last few occasions, I've visited with various strategics that were interested in our operations and from various different nationalities. We've met with the Minister of Mines in country on various occasions. They've asked us to bring in any sort of expertise that allows us to advance our assets, because Mongolia wants to create a beneficiated product that ultimately generates revenue and employment in country, allowing them to export a product that is, of course, beneficiated and has a higher tax bracket. Beyond that, during PDAC this year, the Minister of Mines visited Toronto with his delegation, as well as the opposition leader of Parliament. They both stood up at this breakfast and they both said the exact same thing. So imagine seeing that either in Canada with the Liberals and the Tories, or in the US with the Republicans and the Democrats. It's highly unlikely that two political parties sit in the same room and agree to the same thing. I was then sort of accosted by the minister, and he said, get your feasibility as quickly as possible, because we'd like to fast track your permitting. That's something you don't hear in any jurisdiction. So we are very long Mongolia. We believe it's a fantastic jurisdiction to do business in, and we thank the government for all their support thus far.
Excellent. And over to you, Steve.
When I think about Nevada, I can't think of a better place that you could possibly want to build a mine. So Ali's sort of in the Wild West there in terms of untapped potential. And we're sitting here literally in the Wild West in Nevada, the Silver State, with 150 years worth of unbelievable mining history. And, even recently, the governor of the state going up to Toronto with a trade delegation, giving an unbelievable interview in which he announced that Nevada was open for business to all the Canadian companies, all the U.S. companies. He wanted to know how he's going to extract all the value that he possibly could from lithium, full circle, recycling, everything going forward. Didn't just want to be a miner. In terms of infrastructure, everything that we have there, to the governor saying that, he's going to basically shorten the permitting exponentially. Now, obviously, we know that can't happen. And just so everybody's aware, too, in the U.S., the states of Nevada and Arizona are actually owned predominantly 75-85% by the federal government. So we have a very, well understood. However, it's a very strict permitting process. So, from my perspective, with the Inflation Reduction Act, combined with the governor's support, so the state level, and then clearly, the local areas. If you've never been to Nevada, obviously you have Las Vegas down by the south, and then you have just huge areas where there was mining in the past, but essentially nothing. And there's this tremendous need to rehabilitate these places. So I believe the local support will be there at all levels, which is extremely powerful. I just want to take a second and go back to what Carlos was saying, because I think there's a subtlety to lithium that a lot of people don't quite understand if you haven't been around commodities for a lot. And that is that, there are going to be a lot of these projects that can't produce a battery grade, either lithium carbonate or lithium hydroxide or something else, just by virtue of the geology. And so you're going to have this need for processes like Carlos has and others have to be able to take that technical grade stuff and get it up to where you can put it into a battery. Our project, we happen to be able to do it, but not everyone will be able to. You also have a distorted market, right? Because of the Inflation Reduction Act and who's a friend of the US, who's a friend of China, all this sort of stuff. And the reason I mention this is because it screws up pricing. And I believe this is going to give us a tremendous upwind, a tremendous tailwind going forward, which will put an upward pricing type of a support structure in place. And for people to think about it, whenever you have distortions and you can't have clearing market prices, et cetera, in an efficient way, things get all out of whack and projects get delayed. And as I said, we all seem to agree that you're going to need all of these projects going forward. So, from my perspective in the US, the EVs are here to stay. They're in through legislation, and it's up to the entire industry to come up with a way to get the material. And I think it's going to be harder than a lot of people think. And there's a lot of value to being covered in all of these different projects.
Well said. And it looks like we might have to buy Carlos some time here. Maybe, there's a couple of excellent questions here from the audience. Maybe this is a good opportunity for us. Mason Barnett, and I guess maybe I'll let both you guys take a crack at this, but maybe Ollie, if you want to go first, but are there any DLE projects looking to come online in the next 3 months? And where does the internationally battery metals or IBAT modular process fall into the upcoming projects? Yeah, both of you gentlemen, you can take a stab at that if you like.
Sure. In terms of DLE, as we've mentioned out and Stephen mentioned as well, there's various partners out there that are working on different technologies that suit various different needs. Carlos and his group at Full Circle have now developed, of course, a 2,000-ton plant, and that does use very much what we would call DLE. So that is one that is absolutely in production. Yes, it's not a traditional mine; it is urban mining, but it is the same process. We also have Centenario in Argentina, which is a joint venture between Eramet and a Chinese group. They are looking to put out anywhere between 20 and 30,000 tons per annum, 99.9 battery grade, in the summer of next year. So I think you'll start to see a number of these operations come online here and do it in a very short period of time that will prove DLE can be profitable. And I think that's where, Stephen mentioned, DLE can be a black box because we have seen other juniors stipulate or tell us that they've produced 99.9 battery grade, but you don't know what that cost the market or what that ton cost. And as a result, it's not really commercially viable. So the short answer to your question is you will see a number of players come online in the next 3 to 6 months.
Excellent. And I hope you are secretly hoping for a one-on-one conversation here. It looks like it's just you and me here for the time being. So maybe I'll ask Graham here as another one too, and another good question here as well from the audience. He says there's historically been an issue where the lithium spot price isn't actually a perfect reflection of prices that are being paid. There's been pushback this last year related to that, and he's just wondering, when do you think the real price of lithium will rise to be where the spot price is or was?
Well, I think a lot of it's based on contracts, and you're absolutely right. It's never quite one-to-one ratio. The LME has had conversations to introduce lithium to the metals exchange over in London. I think that'll help change the narrative around the pricing a fair bit. But for now, we're really at the mercy of the spot contracts and the contracts that are in place by all the offtake consumers.
Okay, and Steve, did you catch that question there? It was just a question around, I'll just reiterate quick and see if you have any additional color, but there's Graham from the audience that says that there's historically been an issue where lithium spot price isn't actually a perfect reflection of prices being paid, and he's just wondering when you think that the real price of lithium will rise to spot, and Ollie just mentioned just this long-term contracts contributing to that discrepancy. Just wondering if you have anything else to say to that.
I mean, I tend to think, particularly in the early stages, of developing an industry, you're going to have a thing like with traders who've got, at certain times of the year, have got too much, too little, and you can get these wild swings. From my perspective, I think, again, with going from 500,000 tons a year up to the need for 3 million tons, you sort of have to expect that you're going to get this volatility at times. I hear that the Chinese traders have a lot to do, just like they have a lot to do, frankly, with copper price swings. But I can't attest to knowing anything. That's just my guess at this point in time. And again, there's also the differences. There's subtleties in what different battery makers need. So unlike sort of 4/9 copper, I think we're going to see, LCE meaning one thing in one place and lithium hydroxide meaning something in a different place. Just very, very small subtleties. We'll see going forward.
Welcome back, Carlos. Hope you enjoyed your little vacation there. Let's just pick up right where we left off, if you don't mind. Just we were talking about jurisdictional support, and you were kind of you were on the hot seat there on the bench, and so I'll just let you, if you want to just discuss your perspective of how jurisdictional support is helping Full Circle along.
Sure. I just didn't like what Steve was saying, so I decided No, I apologize. So look, I think when you're in the US, normally you're in a much better place. So, I mean, that's the problem that I'm that.
Oh, sorry, Carlos, you got your mute on there. I'm not sure if I can help you with that.
I'm still having some issues, but anyway. So when you're in the U.S., you're definitely in a better place than the majority of the assets. I was, and to tell you the truth, you go where the best asset is. It doesn't matter where it is. We worked for 7 years in Argentina. We had a great asset there. We had support from the community. Now, it's not easy to work there, but you can make it work if you have a good asset. So I'll start from there, and you can make anything work anywhere as long as they're assets. And like I said at the beginning, all of these assets are going to be needed. Mongolia, the US, Argentina, Chile, everywhere in the world, we're going to need assets, Australia and so forth. So in our case, we are in Georgia, in the state of Georgia in the US, in a manufacturing facility that we have there. And just in Georgia, there's about 20 billion of EV battery related supply chain infrastructure that's being built. And regionally, there's going to be about 40 billion. So there is significant support, governmental support. You can imagine all the governments, all the states want to have that money come in and paying taxes over the next few years. And apart from that, like Steve was saying, we got the Investment Reduction Act, the IRA, that is supporting some of these mines and supply chains such as ourselves. We have applied for a few grants, and hopefully we were able to access some of that money that is non-dilutive and obviously very beneficial for us to develop our story. But independent of that, we work where the client is. So for example, in some of our business development opportunities, we could start potentially working in Europe and so forth. So and we're starting to work in our lithium refinery business as well with a potential client in South America. So when you see that, independent of where we are going to be dealing with potential clients in all parts of the world. And that's not an issue in terms of where our clients are. We will go, but the support from the government and these early stages is always going to be needed. But I always say to people that every part of this business is going to have to stand by itself in its own 2 feet and make sure that makes money independent of government support. But at these initial stages, they're critical, both on the governmental and obviously on the private side, meaning public capital markets, which is not so hot today. We're going to need that too. I mean, we're all listed in Toronto Stock Exchange and potentially co-listed in the US in the near future. And we're going to need the support from those capital markets as well. So hopefully, all those things come together over the next few years, because if not, it's going to be a very hard slog trying to finance these projects going forward.
And I'm going to actually hear, Carlos, I'll throw this one right back at you. There was a question while you were away that I was going through the audience questions, and one that seemed that, excuse me, you'd be able to provide a decent amount of color on. And it comes from, Mason here is asking, I'll just repeat this for you. Are there any DLE projects looking to come online in the next 3 months or so? And where does the International Battery Metals or IBAT modular process fall into these upcoming projects?
Well, I don't think 3 months. If you count ours as a DLE project, which you could, on a much smaller scale, we could potentially be generating revenue in the early next year, so January, in and around that time frame, so Q1 of next year. But it's a much smaller scale. So on a larger scale, we're talking about DLE projects for upstream assets, extracting lithium direct from raw material. That's going to take a few years. You have several in the Arkansas Smackover, Standard Lithium and so forth working away, and you got some in South America working away there, but those are much larger, and we're talking about hundreds of millions to billion. On terms of IBAT, I'm not really, I would say, knowledgeable enough to have an opinion there. I will let them speak for themselves. They are working on a DLE. They have a plant or a modular pilot plant that they're trying to put somewhere, but they haven't been able to have it, I would say, installed in a client site to make it work. So, but that's all I could say there. I don't know the intrinsics of their project, but what I do think is that DLE or lithium extraction process, the way we call it, is going to be catered to specific assets. Do not believe the panacea that one DLE is going to be good for the entire solution. In fact, our lithium extraction process that we're working with one client, a smaller, and it could be anywhere between 500 to 1,000 tons, is going to be different than the one that we're going to be looking at in Europe, and it's going to be different for another one that we're looking at another place in the US. They all have very different ones. I mean, we're utilizing more or less the same technology, but there has other, I would say, cleansing or filtration and so forth that are going to be needed in order to get that product cleaned and extracted from solution. So the DLE or lithium extraction process are going to be hopefully a success over the short term. Not necessarily big projects at the beginning, but as you get smaller and as you get better in what you're doing, you're going to tend to see these projects going to be larger and obviously hopefully successful, because we need these projects.
No, excellent. Thank you. And so this is going to be it's a bit of a question that maybe all three of you have partly answered in previous responses, but I just wanted to have a chance for you to explain where you fit into the local battery supply chain. And obviously you're all going to have different answers to this, but I mean, local potential buyers of your own product, target market, right? I mean, for developers, we could even expand this to discuss like buyout or JV or taking it to production yourself, and then obviously for full circle, I mean, off takes or other agreements similar to that, right? And ultimately the question I want to hear you answer, Carlos, but I'll start with Steve. But so I wasn't going to ask you that one yet. I'll wait for that one, Carlos. But Steve, do you want to kind of provide some color there?
Sure. The way I see everything evolving, and is basically you're going to have companies that are able to basically get the value out of the Inflation Reduction Act in the U.S., aligning with car companies that want to sell to U.S. consumers. So, the value chain is clearly, it started out a couple of years ago, just had Tesla, by Reno, Redwood Materials, et cetera, but it's clearly expanded. You see all the battery plants that are coming around in the Midwest of the U.S., close by to where the existing auto plants are. And of course, there's also a significant component of automobile manufacturing down by where Carlos is on the southeast seaboard of the U.S. and Quebec, et cetera, like that. The idea is to essentially get a lithium end user with offtake who recognizes essentially two things, I think. What the value of an off-stream agreement is, in which you can sort of pick your long-term lithium price. This is always sort of the parlor game I have fun with when I speak to end users is, what do you think it is? Because of course nobody knows what it is. There's no cost curve. There's no existing, industry. We're guessing. All we know is the incentive price has to be considerably higher than what we've seen in the past. And if you do the discounted cash flows, you have something that's worth hundreds of millions of dollars. And then the second component is, what's the opportunity cost if you haven't secured that material in some of these, years going out? Because you simply won't have a product to sell. I don't really know. To me, it's almost incalculable. So we're going to clearly be talking to all the battery makers who are close by. It does everything for us, minimizes the greenhouse gas footprint that people want to talk about to their ultimate consumers. Again, we have a finished product, that should be able to go right into a battery. I think we're going to have a lot of different places that we can put our lithium carbonate or lithium hydroxide as we go forward.
Awesome. And to you, Ali?
Yeah, very much the same. I think, the advantage that we have with respect to jurisdiction, of course, the US and Europe are catching up with gigafactory manufacturing, but China today has the largest number of those gigafactories. The University of Science and Technology in Mongolia is also looking at potentially partnering with us to build that beneficiated product. So there's a couple of different ways that we would look at with selling our product. Offtake is certainly one of them, JV type scenario whereby we bring in a strategic, be it Asian or otherwise. I think you'll find that in Mongolia today, Elon Musk, for instance, had a call with the Prime Minister about a month ago, asking to really review their Critical Mineral Act and get involved in that space. So there is a fair bit of attention. The European automakers are all over Mongolia, the Koreans, the Japanese, also equally all over Mongolia looking for lithium. I think that the level of buyers that we will have is rather significant. But of course, China being on our doorstep makes them front and center.
Mm-hmm. And so, Carlos, I'll pass this one to you, but the one that I was going to ask that, again, feel free to take this in the direction you wish, but just, it's a simple question. Who are you buying from and who are you selling to, right? But just where do you fit into your local battery supply chain?
Sure. So just a small kind of side note on how I see kind of the industry developing generally, and that would include kind of the upstream. And because I say that because we were in the upstream and we were ready to build and we were looking for financing, is that you're going to see, similar to what happened in copper and gold, you're going to see different types of, I would say, junior developers, exploration companies that are going to take the project to a certain level, and at that level, some other company comes in and takes to the next level. And you see that in gold and copper and silver and all that. So that's going to be valuable for the industry. How that's going to evolve in the lithium space and battery material metals is going to be, to be seen, because there are few producers today, whereas in gold and copper, there's a lot of them. So a lot of knowledge there, but you're going to see that happening there. So not necessarily you're going to see some of these juniors I would say, take it all the way to the end. So giving away the offtake may not be beneficial, because some of the current producers today would want to have exposure to that offtake. And if you sell it too early, that's going to be an issue in terms of valuation. But that, just as a side note, that's just kind of like a comment from the outside in, making that. And we had that issue internally at NEO, and I think those issues everybody in the industry are debating. Now, to our business, we look at it, where the client is where we go. So every client's going to be different. For example, one client that we're working today, we sent a term sheet. They will give us a feedstock for free. We process a feedstock and we sell it back to them at their site. So it's essentially a full circle, which is what our name entails. We don't envision that happening all the time with all clients. For example, we're working with another client that said, we don't need the product. So what we will do there is that we will process it to a certain point, send it to our Georgia plant, or install a plant similar to Georgia near them, and then produce lithium carbonate and then sell it to the market at that point. We're not giving any offtake yet to anybody in terms of that free product, because we don't have that product in our in our coffers, in our inventory. But that will depend on the business. And on the battery side, it depends who's giving us the battery. Usually the battery is not owned by us, so we're free to sell that product to whoever we want, be that battery manufacturers, or OEMs, or cathode guys, or whomever that may look like. So it depends where the product has come from. We're going to have a very diverse set of offtakes and supply from different clients that will have different ways that we can, I would say, sell the product to the market. Now, in terms of potentially working with upstream clients in our lithium refinery business, that's a different story. And most likely what will happen there is that we will partner with upstream assets, and then we will try to finance the project going forward, and that will share the gains there. So it will be, again, on a project by project basis, and it is not necessarily a one size fits all approach.
No, excellent. And so I think we're circling towards the end here, gentlemen. Mason from the audience has another good question here for you guys. He's just asking, and we'll start with Steve here, but how much do you see Exxon's move into lithium in Arkansas as a shift in the production processes and growth of EVs?
Well, I think, again, it comes back to the need for all the different types of extraction methods, or sources, I guess I should say, lithium sources. And, that kind of thing from the hydrocarbon reservoir certainly makes sense. What I would say is that, it remains to be seen how successful it's going to be, just as all of these, whether it's the Salton Sea or stuff up in, Western Canada. But the need is there for all of them. So I don't think that I don't think that the EV industry necessarily is dependent upon just what ExxonMobil's doing. But certainly for the concept of what they're doing, I think it's going to play an integral part in the entire, global supply profile going forward.
Ollie, anything to add to that one?
No, I just echo what Stephen said. I think it's inevitable that the oil players start to step into the EV space and the lithium space. It happened with tobacco and vaping, and it's going to happen with oil and electric vehicles. So it's par for the course, and we're going to see a lot more of it.
Mm-hmm. And I mean, it's the theme that you guys all three of you are expanding upon, is that more of everything, right? That there's room for everybody in this world. And Carlos, I mean, final thoughts on that one? Any additional color to add?
I always said that once the oil and gas companies and the large chemical companies start coming into the market, that's when it's mainstream, and you're starting to see it. If Exxon is doing it, the others will follow. And you're going to see Chevron, Schlumberger has already been in it. In Argentina, there's oil and gas companies already involved in lithium extraction and processing. You're going to see this happening at a much larger scale. So look out for acquisitions in these price points and a lot of consolidation. So you're going to see the big boys coming in with a lot more money, with a lot more, I would say, capital to push around, because there's a lot of money to be made. So that would include not only, well, I think three big ones. One is oil and gas majors, the chemical majors, and then the mining majors are also coming in. So the Rio Tintos, the BPs, all those guys are coming in, hopefully, and helping the financing of this industry. I mean, we need billions, so that's the only way to finance this.
No, excellent. Well, gentlemen, I think that does bring us to the end of our questions in our interview here today. So yeah, again, another strong interview, three articulate gentlemen, and yeah, thank you for your time, guys, and enjoy the rest of your day.